Welcome back to Power Lunch, everybody. After yesterday's debacle that really took place in the last 2 hours of trade, the industrials are up 250 points, S&P by 29, almost 30, and the NASDAQ by 104. Basically half percentage point gains. Dom Chu, what do we have in our Navigator today?
All right, so Tyler, what we have right now is the 10-year Treasury yield continuing to climb well above that key 4.5% level traders are watching. Now, one of those traders believes that yields will continue to rise in the short term. You saw him earlier. Back with us again is Jeff Kilburg, the founder and CEO
Wearing
of
the
KKM
Indiana
Financial.
coat. He's
got the Indiana coat on right there. All right, so let's talk again about the yield picture. So take us away to this world here where the yield is not going to be as scary, or will it be as scary as the recent price action has lent itself to?
It's just remarkable, Dom, how much has changed since yesterday's Fed meeting. So if you look at where the 10-year note has been, going back to before September when they had their massive 50 basis point cut, we're nearly 100 basis points higher. So I think the trajectory is going to continue to move higher for a couple of reasons, Dom, due to the fact that they can't get inflation under control, due to the fact that they're being forced not to cut anymore potentially in 2025 beyond that pause. But I think we have so much uncertainty about tariffs. We have so much uncertainty about tax cuts. We have certain uncertainties about deficits. That's going to propel potentially the ETF, TLT lower. And this is the inverse relationship, Dom. So think about it. If the 10-year note goes from 4.5% up to 5%, TLT, the $50 billion ETF, will go lower. So it's an inverse relationship, but I want to be considerate of that move higher, and I want to use options to express a bearish view on TLT, but yields going up to 5%.
All right, so let's take us through we're showing the graphic right now about the put spread. It is a bearish trade. Take us through the mechanics of this option strategy.
So it's a bearish trade when you think about where we're coming, but this is a put spread. So I want to define my risk. So I want to be a buyer. And TLT right now is about 30 cents higher from where I executed this trade this morning. But I want to be a buyer. I'm going out to January 24th, Dom. That's 3 days after the inauguration, 4 days after the inauguration. I want to be a buyer of the $88 put in TLT. I paid about $1.40 this morning, but I also want to consider reducing some of that cost and selling the premium. So I sold the same expiration, January 24th put for 35 cents, and that put is at $84. So I'm hoping if the yield does go up to 5% in the 10-year, this put spread will fill out, and I'll collect the $4 minus what I paid, which was about $1.05.
All right, and so if this happens, the max you can make is that difference, right, minus the $1.05 that you paid for it. At what point do you think you would bail on this trade or say that, you know what, maybe it's not worth it, or how you can risk management by saying already that you've already purchased this thing, but how exactly then would you risk manage around it if it's not exactly going in your favor, or do you care?
So when I buy a put spread, I'm defining my risk. So I'm comfortable losing the $105 per one lot. Because if this is wrong, we're going to see my equity exposure appreciate. It's going to continue to move higher. So on a put spread, I define it out of the gate. I will not really manage it or over-manage it, I should say. But if we do see this come to fruition, if I'm correct about this trade, Dom, you're going to see equities move down about 5 or 10% because we saw the 30-year jumbo loans, they go over 7%. You're seeing the 30-year futures go to 4.75. This could be disastrous short term because the consumer will get hit with these higher yields. We just haven't felt it yet. There's a lag effect, as always, and now we're 100 basis points higher in the 10-year note from last September. So I think there is going to be some effect on the consumer moving forward.
All right, Jeff Kilburg, navigating the bond market for us right now. Thank you very much for that. We appreciate it.
Go Irish. That's my last go Irish. I had to get one more for Ty. Gotcha, Ty.
All right,
hey,
gotcha,
let's bet a steak dinner. How's that sound, Ty?
Oh, it sounds great to me.
I'm sworn witness to it.
You're on.
Now, too.
You're on.
Don, you can come too, buddy.
All right.
See you guys. Go Hoosiers.